Hey yo, what's up everybody? Welcome back to My Life in Stacks, where we stack all the precious things in life. So as you can tell by the title of the video, another March rolls around. You know what that means? Another bank collapse. So not quite yet has this bank collapsed, but we are definitely on the verge of it happening. And I just wanted to talk to you guys and see what you guys thought about some of the things taking place in the financial markets, specifically in the banking sector with these banks. So I want to say it was March 5th, a year ago, that we experienced the downfalls of First Republic Bank, Silicon Valley Bank, Signature Bank. I think it was also Doral Bank, which is a smaller one. But those banks that collapsed about a year ago today, coincidentally, happen to now be bringing up some more bad news with New York Community Bank. So they have some of the reasonings as their loan loss allowance increase. So in late January, NYCB dramatically raised the allowance for potential loan losses on its balance sheet. So they're reporting bigger losses on their loans, which is pretty reasonable for why they would be going under. Their credit rating downgrade shortly after adjusting its loan loss allowance. Moody's investors downgraded NYCB's credit rating to junk status, pretty much saying, well, this bank sucks, and if they can't even make a profit on what their whole business is, which is loans, then what good are they? After that, they also had the internal control weakness as a reason, which is NYCB disclosed that it had identified material weaknesses in the company's internal controls related to internal loan review. Such weaknesses can undermine the bank's ability to manage risk effectively and maintain financial health, pretty much like giving loans to people who don't need to be having loans. Their leadership changes, they fired the CEO and replaced them, which usually indicates internal turmoil and instability with any business. When you replace the CEO, it's definitely going to scare some people off to think what's going on in this business. And you have challenges in real estate loans. NYCB faced an over concentration of commercial and multifamily real estate loans, with many New Yorkers still working from home and state lawmakers limiting residential rent increases. The bank's real estate portfolio became vulnerable. So in turn, they're pretty much saying that since all these laws are coming into play where they can't increase rents, but yet the rates are, through the roof on multi-million-dollar properties, because in this case it's multifamily and commercial, but you can't raise the rents to what you need to be able to, pay your mortgage with, that tends to make you default on your loan, which tends to make the bank not get their money in return like they're supposed to, and follows with foreclosures and all that. And then lastly was just the market conditions. Higher interest rates put pressure on NYCB's older treasury holdings, and some depositors moved their accounts elsewhere. Additionally, commercial real estate, a key business for NYCB, faced challenges due to the economic environment. So pretty much altogether, they're saying that pretty much what it takes to make a bank be successful, they can't do. Which leads me to my next question with the news that came out today with NYCB agreeing to a deal with several investment firms, including Stephen Nunchin's Liberty Strategic Capital, Hudson Bay Capital, Reverend's Capital partners. They came to a $1 billion deal. Who in their right mind would ever come to a deal to where you want equity, because that's what the $1 billion was in exchange for, equity? Who in their right mind would exchange dollars for equity in a company that isn't doing what it has to do to be successful in that industry? As a bank, your job is to lend out money, charge interest on it, you get your return, you hold people's money. And I say you hold people's money because you're not really holding it, you're lending it out. That's your job as a bank. So why would anybody want to buy into a bank that's not doing that properly and effectively and to the best of the ability of that bank? Which leads me to believe, is this another case of too big to fail? I know NYCB isn't a huge bank, but they're pretty big in New York. And when it comes to New York, you're talking about a lot of commercial real estate. And that has a huge effect on the entire state, the entire city, with what amount of money is invested in commercial real estate. So my question is this another bank bailout that they're disguising as, oh, the Reverend's Capital Partners, Liberty Strategic Capital, Hudson Bay Capital, they wanted equity, and so they're coughing up $1 billion to save them? Yeah, I don't think so. I think this is a bank bailout again, I think this is a government bailout, and they just don't want to admit that they're trying to save their butt again. Because guess what that would do? That would make another run on the banks, just like it did in March of last year, which, funny enough, is right before I started, or right after I started collecting gold and silver. If you guys want to see that video, I'm going to be posting it here soon. It's going to be a full year recap of me collecting gold and silver, because, quick little backstory, I was doing all the research, all the different things that I needed to do to see if investing, well, I don't want to say investing because it gives people the wrong idea, if buying gold and silver was a good store of value for my wealth. In doing that research, I finally came to the conclusion that yes, it is, and I will start doing it. So I took a chunk of my funds, and I started to buy gold and silver. That happened. I chose to do that on like a Thursday, and funny enough, I started to do that on a Saturday, and funny enough, Monday is when the banks started all coming out as failing. Going BK, those three banks that I mentioned earlier, with the Silicon Valley Bank, the First Republic Bank, all these banks were going under, and there was a run on the banks. Everybody was pulling their money out. They were scared. Funny enough, that's actually when I went and did an experiment to pull out $10,000 to see if they would actually allow me to pull it out, and they did. If you want to see the video, there will be a link in the description of that video. Me trying to pull out $10,000 in cash. But moral of the story is, another bank pretty much going under. I think they're getting bailed out by the government again, and they're disguising it as, oh, these investment firms are gonna invest money for exchange of equity. Yeah, I don't believe that. So let me know what you guys think down in the comments. Do you guys think this is another case of too big to fail? And not even so much too big to fail, but do you think that they're saving this bank's butt so that there's not another run on the banks, and so that people don't just start pulling out their money like crazy and not trusting the banking system again? Because if you guys remember, March of last year, when those banks were failing, is when a big influx of buyers came into gold and silver, precious metals period, and that pumped the price of precious metals up. But that's because a lot of people were coming in. But do you think that a lot of people don't trust the banks, and so they already know that, and they don't want a bank to fail publicly again like that, and so they're protecting them so that way they don't have a run on the banks, and they don't lose the trust of the people to store their money in banks, knowing well that if you just store money in a bank, you're losing your purchasing power. Every single day they print money, your purchasing power is going down, and they know that. We know that. We don't like to accept that, and so we just turn a blind eye to it. But if it's point blank period in our face, like, hey, banks are failing, what are you going to do about it? Are you going to continue storing your money there? Obviously, most people wouldn't. So I think they're just trying to protect the banks, and protect their dollar, because they do not want another run on the banks, and they do not want people to pull their money out, because without our money in the banks, guess what? It's a failing system. So let me know what you guys think down in the comments. As always, I'm stacking. I have some purchases that I'm going to be making this weekend at the coin show in Anaheim, so stay tuned for that. Let me know what you guys have been buying lately. Don't forget to like, subscribe, and I'll see you in the next one. Keep on stacking all the precious things in life.